Hey boys and girls, I'm here. So I'm currently on holiday with the family, hence why I'm not at my main computer. So I thought I'd do a little update because I've been going through the comments on some of the videos, etc., and I see a common thread that's said by a few people, and so I thought I'd make a few little notes. So here's one from Eddie Brock. You're an inconsistent man. Last week you're confident, blah 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 blah. And I basically just took some of these screenshots. Feel free to pause them and pause the video and read them. But they're all saying the same thing, that I basically flip flop to and fro with what I say. He is so contradictory with the statements, it's funny, etc. See, the thing is, I'm a trader, I'm not a dabbler, and most people on YouTube have no idea about trading properly. Um, so yeah, why is this? So I've made a few little notes, and let's just go through them one by one. So first of all, you guys have very low context of the things I'm saying. Now, it's not necessarily your fault, but the thing is, I only put out about 5% of the stuff that I do think and say to my traders. So you're missing out on so much context like the markets I'm looking at, the methods I use, the time frames, the risk to reward ratios I'm using, the hit rate of the strategies I'm using, and also the expectancy. So that's the context. So you're just simply, yeah. Um, the other thing is also timeframes, which I mentioned there, which I think is worth talking about. So when I make my videos, I talk about a lot of different things. Um, and so, for example, when I'm talking about macro stuff, the time frame I'm talking about is weeks and months. So when you're looking at interest rates and house prices and all that, and the CP line and all that sort of stuff, um, that shit takes weeks and months to play out, not tomorrow. So I may say, I think the dollar's rising and it's going to affect stock or whatever. Doesn't mean it's going to happen tomorrow or the next week. If you're talking about the dollar index, it's going to take days at best. Um, so it doesn't happen straight away. So I guess like if you see the dollar index move in a nice manner, like a like a proper move up or down, it takes about 1 to 3 days for it to really filter down into stocks and crypto. So yeah, there may be times where the dollar index is going up, and so is Bitcoin, and so is stocks. But it's because there's a lag. And the other thing that's really important to know is the time frames. So, for example, if you're looking, looking out of candlesticks. So, if we look at just any old chart, so let's get an empty chart. Ugh, sorry, let's get an empty chart with, okay. So here you can see I'm looking at the daily chart. Okay, so every single one of these candles, whether it's green or red, is a day's worth of trade movement. Now, most of the time, if you have a strategy, it will take anywhere between 10 to 30 candlesticks to play out. So, for example, here, I mean, this is cake that I did ages ago. I was looking at a compression here, a rising compression. Oh, no, symmetrical compression. Um, and I said that we'd see further falling down to $10. Well, it didn't happen straight away. It took one, two, three, four. It took under around 20 candlesticks for it to hit that level. Um, and so yeah, it's a good rule of thumb: 10 to 30 candlesticks for a strategy or for a move to play out, depending on the time frame. So if you look at the daily chart, that's 10 to 30 days for something to play out. If you're looking at the 1 hour chart, it'll take 10 to 30 hours for something to play out. So you have to understand the amount of candlesticks per time frame you're looking at. And I typically look at the daily chart. Um, so yeah, that's it. The other thing which is really important is this. I'll just do all this in one. So trading is not about being a fortune teller. It's not about being Mystic Meg. It's about finding the two to three most probable outcomes. Then it's about applying a strategy and outcome per potential. Sorry, it's about applying a strategy to each outcome. I've written that wrong. There we go. Applying a strategy per potential outcome. So you sat there so if you get a piece of paper out and draw something, so I'm using my shitty trackpad on this laptop, and so you have outcome one, outcome two, outcome 3. And then you're going to do, obviously, one outcome, that outcome, or that strategy. And then if that were to happen, then it's likely to have one or two, let's say two different things. So you end up playing chess with the market. So even though you think there's 3 possible outcomes up here, and you've got a strategy and an action plan, depending on which one happens, when that then plays out, you're then likely to have at least 2 key outcomes from that second decision. So I always play chess with the market. So it's not just reacting. If you react to the markets, you're just going to get absolutely ruined. So, yeah. And so once you've thought about your probable outcomes and then, planning the trade and then trading the plan, you then need to observe without ego. So most people in the crypto markets, especially, have very little trading knowledge. Crypto is like the first thing they've ever invested with. And so they're more obsessed about being right than making money. So you have to observe without ego. So even if you think there's a higher probability of, one potential outcome happening and it doesn't happen, people are worried about losing face. Well, fuck that. I want to make money. I don't care about being wrong. I'd rather reverse my position, flip it, than being dogmatic and sticking my peg in the ground and trying to defend that peg. That's stupid. Just go with what the markets are showing you. The charts basically is a visual representation of every single market participant's actions at that point in time. And again, looking at a chart, most of the time, especially with stocks, the chart, the price action you're seeing is actually forward anticipation of future data. So everyone's always trying to bet in the future. So yeah, you're constantly playing chess against other people, not necessarily the asset. So yeah, when something then happens, after you've done some ego-less observing, you action the plan when it plays out. And then on top of that, each strategy you deploy, you can't have one strategy for every freaking market. Again, that's silly. You need a strategy per market condition. So on top of that, each strategy you deploy has its own expectancy, risk-reward ratio, hit rate, etc. And with the trading strategy, it's finding the low risk, high probability outcome setups. So yeah, there's a lot. I mean, I could talk for ages just on this point here, but hey ho. And what's next? Let's have a look. Directional biases. Oh yeah. Also, if you're, let's say, looking at a crypto, you have short, medium, and long-term biases, don't you? So for example, crypto in general, short term, I'm still actually very bearish. Medium and long term, I'm so bullish it's ridiculous. I mean, how can you not be bullish when you're looking at a chart like this? Here we go. We open up Bitcoin and then we go to the weekly logarithmic chart. Here are all the lines and then zoom the hell out. Okay, so remember, crypto or Bitcoin especially is an exponential tech or an exponential network, and therefore you've got to look at it on the logarithmic scale. So anything bottom left to top right is exponential in nature. And when you plot the base support level for Bitcoin on the weekly chart, what the hell is it doing? All it's doing is caterpillaring up this lovely base support level. And only once really has it properly punctured it. It got rejected horrendously. So what's happening? Are we in a bear market? Are we fucked? We're nowhere near a bear market. We're just in a short-term pullback. That's all that's happening. We are in a multi-decade, or not, I can't say multi-decade, we're in a decade-long secular bull market here. And all that's happening is that we're just pulling back to base support. We are nowhere near a bear market. Even the 2018 crash wasn't even a bear market, it was just a pullback to base support. So what's happening here is I'm seeing a bit of a gap. And remember, base support will always drag it back in. So, of course, I'm expecting Bitcoin to attack my little white hole here. So, yeah. So that's that one. And again, if you look at loads of different things If you take like some of the on-chain stuff, the number of addresses with non-zero balances is still growing like crazy. Same with Ether as well. If you look at the amount of new addresses, it's pretty flat, but this still means that every day there's roughly 400,000 new addresses being generated every single day. It's absolutely insane. You look at exchange net position, we now have a massive, massive outflow of Bitcoin every single day from exchanges to cold storage. Roughly 40,000 Bitcoin per day leaving. You can see the balance of exchange, percent balance of Bitcoin on exchanges. It's just dropping precipitously. If you then look at the hash rate is just absolutely just rocketed, and that precedes price. There's so many things I can talk about. So let's move away from that. So of course, I'm massively bullish with Bitcoin, medium to long term, but short term, no. I'm actually quite bearish short term, which is why I'm sat in cash. I'm not in crypto. I was for a couple of weeks and then got back out again. So here's the other one. I'm unemotional. I have an unemotional connection to asset. Once an asset reaches base support, bugger out. Just literally exit once base support is breached. Simple. And it really isn't hard or time intensive. I mean, I always use Olympus DAO as an example. If we get out of the weekly chart, oopsie, right, get out of the log. Here we go. See, the thing is, if you just focus on the daily chart, you don't have to stare at the screen. You can simply just draw your line, however you're seeing it, and then every day just check it. It doesn't take much, and then you can see the market reached it here, and then you have literally days to react. Even if you ignored it or missed it that day, you could have got it out of home any time around $800 to $900 very easily. And then as it's going down, you just draw the next line as it falls. And then you simply get back in when it reaches base resistance, which it is sort of doing, which is why I got back in to OHM a few weeks ago, somewhere around here. It then rallied. Guess what's happened? Base support has been broken again. So what am I doing? Sitting in cash. I'm not going to take a hit just because, I want through. So, yeah, that's that. What's last? Last but not least. Yeah, here we go. This is really crucial. When you're playing with millions of pounds like I am, you will trade and invest much differently than if you have a 10K account. And also, if you are trading company money and stuff like that, you will trade very differently. So to the point where it is much, much better to be super proactive, help even reactive, and jump out of the market if there's any sniff of falling, than take a 50% price crash on in the face. And yeah, so that's what I do. I'd much rather jump out into, if there's any sniff of, potential calamity. And if I'm wrong and the market just keeps on going back in, well, I haven't lost anything. All I'm doing is I'll jump back in the market and I'll just have slightly less tokens. Yes, I may have missed out on 10% worth of tokens, whatever, but at least I haven't lost money. Whereas most very, beginners, or basically most crypto owners, they're pretty much sat there with 80, 90% losses at the moment, whereas I don't. So yeah, and also when you're looking, I mean, for example, obviously this is a regulated asset, so I can't really say much. But if you look at the dollar right now, and you were to simply plot some simple lines like this, what do you think is happening right now? You can see the chart is basically bounce off here, and then someone could say it's looking pretty damn bullish at the moment. And so if you think it's going to go back up here, and then perhaps you could say, oh, this is actually an inverted head and shoulders, and you have potentially a neckline here, and we could see further movement up here. If, as I'm saying, if you're thinking this, and the dollar does start rising, well, what's that going to do to everything else? it's going to shit on stocks on Bitcoin. Again, Dixie, another indicator, pretty much the same thing. Again, looking very interesting. So if we have the dollar rising, stocks are going to start falling. Again, we've got all sorts of double tops here. Again, it's looking pretty interesting. Again, when you look at the dollar index, that's basically based on a basket of different assets. So if you just look at one of the world's biggest, most traded pairs, pound dollar, again, what's happened just now? It's basically just got it just got reacted and rejected. Sorry, it got rejected from this level here, painting one hell of a bunch of really high test candles. So you've got to make up your mind. Obviously, these are regulated assets, and I can't tell you what's going to happen. You can probably guess what I think, but yeah. So for the moment, especially with all this stuff that's going on in Ukraine, I'm very happy selling cash. Just watch. Anyway, I hope that makes sense, and I'll see you soon. Toodles.